Hey guys, it's Sasha. 3 days ago I made a video about Palantir's Q2 results, and that earnings call was right up there with the worst I have ever listened to. I mentioned in that video that I'm going to do some maths, and the likely outcome is that I will be selling my Palantir position, and the very next day I did exactly that. I have now sold out of Palantir in every single one of my portfolios, and I am now an ex-shareholder of Palantir. And I know there are going to be a whole load of Palantir fanboys out there in the comments below thanking me for selling them shares at a discount, maybe in somewhat more colorful language. There'll be plenty of insults thrown and me being told that I just don't get it. Please feel free to peruse the comments for the best backholder reactions and do your worst against each other. But in this video, I am going to explain exactly why I have sold my position. I'm not telling you what you should do, I'm just sharing my opinion, what's changed in my personal valuation of the company, and why I do not like the optics for Palantir. I have sold most of my Palantir positions at a loss, and I had to pay a whole load of fees for the privilege of doing so. So I did not make this decision lightly, although I could have avoided paying all of those fees if I just bought Palantir using Lightyear, who are the sponsors of today's video. You see, the problem is that Lightyear wasn't around when I was buying my Palantir shares, so when I sold my Palantir shares on one of the Trading 212 accounts, I had to pay a foreign exchange fee. And when I sold shares in free trade, I had to pay even more fees. Look, I paid 4 Palantir shares just to sell that Palantir stock. If I had Palantir shares in Lightyear, I could have bought them and sold them without paying any fees at all, because Lightyear does not charge commission or foreign exchange fees for up to £3,000 per month. And here is an even better thing. When you sell, you can keep your money in dollars. So even if you sell a lot more than the £3,000, let's say you sold £30,000 worth of Palantir shares in one go, I know, you still won't have to pay any fees because you can then keep the money in dollars and reinvest those dollars into other stocks without paying anything. Lightyear is available in the UK, and as of a few days ago, they're also available across the EU in countries including Germany, Spain, France, Italy, Portugal, and others. Please use my link in the description if you want to try them out, and remember to type in promo code SASHA to get a bonus $10 worth of whichever stock it is that you want after you make your first trade. So Lightyear is not just the only app I can use that lets me invest in US stocks 100% completely for free, but they even pay you $10 to try them out. Remember to use promo code SASHA to get the bonus, and as with all investing apps, remember that your capital is at risk. So Palantir reported their results on Monday morning, and the results themselves were not good. There were a few problems in the results. First, Palantir took a $200 million hit on their investments in SPACs so far this year, and this is somewhat representative of the overall approach. $139 million out of that $200 million loss came in just the last 3 months. As of the end of Q2, Palantir only has $99 million left from those investments, and on page 34 of their 10Q, they say they may continue to sell some or all of our existing investments. I highlighted this exact issue last year when they were basically gambling hundreds of millions of dollars on completely random SPAC investments for seemingly no good reason. And some of that spend was way worse than gambling, because Palantir invested money in companies who then bought Palantir services using the money that Palantir just gave them. Do you see the weirdness in that relationship? So Palantir goes and gives the company a whole boatload of cash. Those companies then paid the cash back to Palantir to add to Palantir's revenue numbers. And now Palantir has written 2/3 of those investments off already and sold out of some of these SPACs, and say that they are maybe going to continue selling out of the rest. If you want to find out exactly which ones it is that they have sold, you can't. In the Q2 report 12 months ago, you could see the exact investments they were making at the time because, hey, times were good and stocks were only going up. $41 million went to this one company you've never heard of at $10 per share, and that company is now at $2.76. Another $35 million went into Wejo or Wejo, I don't know, at $10 again, now worth $1.68. Then another $35 million into Babylon Health. Oh, that one lost 91% of its value and now trading at 90 cents. Every single one of those SPACs has absolutely collapsed in value, most by around 80 to 90%. But of course, they no longer print that table, so you have no way to find out for yourself, because As with most things about Palantir, they massage the way that they present information to hide all of the bad things, just delete them, stop showing them, and make up new metrics when old metrics fail. Then there is this ongoing share dilution issue. It is very normal for early stage companies to pay their employees with stock options to hire the best talent for the long term. I get that, but the normal way to do it is to do a whole lot of that sort of thing early on, and then gradually reduce it over time. As your company matures, you need to incentivize people less. You can just pay them actual money. Palantir seems to be doing the opposite. A year ago, in the first 6 months of 2021, they granted 10.1 million RSUs, and I'm looking at the period after they went public because the shares absolutely went bananas at the end of 2020. And in the first 6 months of this year, they have dished out 11.2 million RSUs, so 10% more. The total stock-based compensation was only $145.8 million in Q2, and I say only, but that is an absolutely ridiculously absurd amount of money to be spending on stock-based compensation relative to your revenue at this stage in your growth journey. But that number is much lower than it would be because the share price for Palantir has recently collapsed. The bigger problem for Palantir, other than all of these things, really is with the actual business performance. Their business was expanding beyond the US for the last few years, trying to grow outside of their start that they had with the US government and going into commercial. But all of that has now reversed. After Alex Karp has repeatedly been saying that every country in the world that isn't the United States sucks, for some weird reason that is completely unfathomable, the global business for Palantir has stopped growing. How very strange. So now they're becoming more concentrated on the US market, which they're portraying as a good thing and as part of the strategy, as though that was the intention all along, which is obviously complete bullshit because they were saying the exact opposite for the last couple of years, and it's just a function. The whole reason that they are stopping selling outside the US is just a function of their CEO being an asshole. Palantir boasted about hiring a whole load of sales staff back in Q3 and Q4 on the earnings call. In some of the presentations, they grew their sales team, for example, from 12 to 80 at the end of 2021, and they said that they planned to continue hiring aggressively into Q1. But on the earnings call we've just had, Alex Karp said that they only had 41 trained sales staff. So did they hire aggressively like they said they would? Did they fire for some reason half of their sales staff? Or does their sales staff training take over a year to complete? I mean, I don't know because I haven't seen anything at all mentioned about the sales staff ever since they were proudly boasting about those numbers. Just another one of those examples. And their sales pipeline is failing in the meantime. 12 months ago, their total outstanding deal value was $3.4 billion. Now that number is $3.5 billion. And the total outstanding deal value is the sum of all the work that they've already sold or that they expect to sell in the future. So I'm not sure what all of those sales staff are doing, but they are not selling. According to Alex Karp, Palantir has no competition, and every other company absolutely sucks in comparison. In fact, there is just no comparison. And even their customers and potential customers also suck because they don't understand the full potential of Palantir systems. Alex Karp pretty much, not quite in those words, but to exactly that point, made those statements in previous earnings call. And for some reason, nobody is queuing outside the Palantir Denver HQ buying their software, and the sales staff can't seem to sell it either. The fact that the total outstanding deal value has been flat for 12 months indicates that the earnings in the next 2 to 3 years are likely to suffer significantly more than what they are currently presenting. And after saying that they will easily smash their 30% growth per year target every single quarter previously, Palantir have quietly deleted that pledge from their Q2 report, and their guidance this year is for only 23.5%, 3 months after they said they'd hit 30. Somebody tried to ask a question about this on the earnings call, but Alex Karp rudely interrupted him before banging the table with his fist. He talked a whole load of nonsense and then said that he still thinks they will hit 30% growth through to 2025. But if you are absolutely sure that you are going to hit that level of growth, why would you go and delete that statement from your quarterly report when it was there every single time before? It makes makes you kind of look like you're full of shit. The company's own projections are showing a massive slowdown in growth in Q3 and Q4. Their focus is once again on the US government. That's all they really talked about on the earnings call yesterday. Nothing about the rest of the world, nothing about commercial, which is, it's a good long-term way to earn money. The US government is reliable. There's nothing particularly wrong with it, but the US government is not going to grow the Palantir revenue by 200% in the next 3 years. And all the evidence at the moment is pointing to a slowdown instead. This year, Palantir is projecting revenue to grow at 23%. Last year, it was 41%, and the year before that, it was 47%. If you zoom out, the numbers just don't look good, and the total outstanding deal value is the same now as it was 12 months ago. So the future numbers are likely to look even worse. There is absolutely no indication in the data the growth next year will suddenly jump up. I'm just not seeing where it comes from unless they magic something up in the next quarter or two. The numbers might go up, I don't know, but projecting that the numbers would definitely go up, for me, would be investing based on hopium. Let's give Palantir the benefit of the doubt. Let's say that they hit their 1.9 billion target for the year. And next year, despite what the numbers are saying, let's say they hit 26% level of growth. And then that rate of growth will naturally taper because it has been, and because the company is maturing, there's less potential governments that you can sell to. There's only one US government around. Then let's assume that their gross margin grows steadily as a scale, blah, blah, blah. Give them some benefits of doubt. The valuation of a company like Palantir is massively dependent and susceptible to the rate of growth that you plug into the assumptions in a DCF model. Stick in 30 or 40% growth, for example, and you will get a target price of $50 or $60. But if that growth rate is more like 23% like it is this year and dropping, then the target share price very quickly drops to $20. And over the last few quarters, I've been highlighting this risk and how outstanding deal value is by far the most important number in the quarterly reports. And every single time, that number is looking worse and worse. That number hasn't moved. For me at the moment, the potential gain compared to the level of risk of Palantir is just not good enough. There are many other growth stocks that have also sold off this year, where the share price has also dipped, but where I see a much better opportunity. The level of risk for Palantir is particularly high in my opinion because they obfuscate the numbers that they report. They repeatedly misrepresent data to make it appear better than it is. Graphs that are not related are printed next to each other to sell a false narrative. Graphs that are suddenly looking worse are being deleted and removed. And new metrics are invented every quarter to replace old metrics that suddenly look much worse. This quarter, they were talking about US total revenue, which they've never mentioned before as a single figure. As an investor in the business, I want to know what is actually happening in the company, truthfully. If it's good, tell me it's good. If it's bad, I also want to know that it's bad. I do not want a cheesy salesman tactic of trying to pretend, stick fingers in your ears, go la la la, that things are good when they are not. And I also think there is a very high risk of having a CEO who openly slags off his own biggest customers publicly. A CEO who seems to hate half of the world and thinks that every country that is in the United States sucks. And a CEO who seems to be praying for World War III to start, as that's about the only thing that's going to save Palantir's collapsing growth rate. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, and I'll see you guys later.